I'm Chao Suen. Thanks for joining us on ST Live. The cost of living in Singapore continues to rise, and we are all feeling the pinch. The latest inflation figures released by the Monetary Authority of Singapore showing that core inflation rose to 5.3% in September, up from 5.1% in August. The biggest driver for inflation comes from the increase of prices from food, services, retail and other goods. However, the Consumer Price Index inflation for all items was 7.5% year-on-year in September, unchanged from that in August. The headline inflation remained the same, as higher core and accommodation inflation were offset by lower private transport inflation, which moderated due to a slower pace of increase in car and petrol prices. Now joining us live is Associate Editor Vikram Khanna. Thanks for joining us today, Vikram. So let's get your immediate reaction. What do you make of the latest numbers? What concerns you the most?
Well, I'm not surprised that core inflation has gone up slightly. And I'm also not surprised that headline inflation is about the same at a fairly elevated level of 7.5%. I think the main driving forces of inflation are still in play. I mean, you have high food prices, partly because of the war in Ukraine, and partly because of India's banning of rice exports and other supply side shocks. And then you have services, which is a major driver of inflation. I think you might have read the BT's headline today, the BT front page headline today, on F&B operators raising wages for their workers, in some cases by as much as 35% over just July. So there's a labor shortage which has got worse after the reopening post-COVID. So that labor market tightness will probably continue for the foreseeable future. So that should keep prices high, because labor prices pretty much feed into all services. So I think that is what is concerning. So that's what will keep inflation stubbornly high. On the headline inflation, if you bring in accommodation and private transport, well, accommodation prices, the accommodation inflation is also high because of high rentals. High rentals are due to many factors. I mean, there's fewer HDB flats available for rent. There's more demand from expats who've come back to Singapore after the reopening. And there's probably going to be even more coming in with the issue of one-pass systems. Plus, there's construction delays that have affected BTO flats as well as some private condos. So all of these factors are going to keep accommodation inflation relatively high. You mentioned that transport inflation, private transport inflation, has come down a little bit because of softer energy prices and slightly lower car prices, but they're still pretty elevated. I mean, it's the COE for category B, that is the 1600cc and above, is like $110,000, which is pretty much close to a record. And energy prices, while they have come off, I'm not sure they'll stay down, especially if China opens up, and then that'll drive energy prices higher. So all in all, I'm not surprised at the numbers, and I fear we'll have to live with this till at least the second half of 2023.
So Vikram, for most of us who have home loans, savings, investment plans for the future, how worried do you think we should be, and why?
Well, I mean, if you manage your finances wisely, I don't think you should worry too much. Of course, if you just have savings, if you leave them in the bank, they're going to lose value in real terms because bank interest rates are nowhere near inflation rates. So you've got to try and do something with your money. I'm not an investment advisor, but I think you need to go into something that has relatively inflation protected, maybe, I don't know, REITs, maybe inflation-protected securities, some things like that. As far as home loans are concerned, well, try and postpone, if you can, big-ticket purchases that require a lot of borrowing, because with interest rates headed higher, the US Fed has not stopped hiking rates, and this is going to translate into higher mortgage rates, including in Singapore. So if you can avoid making big-ticket purchases that require borrowing, try and do that. What was the third category you mentioned? Savings, loans, savings, mortgages, and investments.
Investments and plans for the future.
Investments and plans for the future, yeah. Well, yeah, investments I've addressed. I'm going to try and go into something, inflation-protected securities. Some people suggest real estate, but I'm a bit wary of that, given that it involves borrowing and paying hefty mortgage rates. So I think just be prudent and watch your spending. Try and track your purchases. Try and avoid or postpone your big ticket purchases. That's all I can say. Yeah.
That's fantastic advice. But looking forward, Vikram, what do you think the outlook for the Singapore economy will be, as it looks like inflation will continue to rise, especially globally?
Yes, I mean, inflation will remain elevated until probably the second half of next year. However, I think there is a risk of a recession. I think the three major economies, the United States, China, and the European Union, are set to slow down at the same time. The EU is probably already close to recession. The US is not there yet, but if interest rate hikes continue into 2023, I think we could see significant weakness in the US. And I think the Chinese economy is still pursuing a zero COVID sort of policy, which is slowing things down. And I don't see any signs of that being lifted quickly. So I think China will also slow down, and all of this will have an impact on the Singapore economy and the region. So I think you could expect some weakness in the economy next year. I don't think there's a forecast, but except to say that it'll be below trend. But I think there is definitely a risk of a slowdown and possibly a risk of even a recession. So that would bring inflation down for sure. So the outlook, I think, for next year is bleaker than this year. If not for inflation, definitely for growth.
Thank you for your very valuable insight. This has been Associate Editor Vikram Khanna. Our coverage continues on straitstimes.com and on Facebook as well as YouTube. Don't forget to hit subscribe to stay informed and activate the bell icon on YouTube to catch our live news updates. I'm Chao Suen, and thank you for watching.